Good afternoon. How are you? And how was lunch? Okay, that side, how was lunch? Pretty obvious, it was good. Okay, so let me start. Yeah. Take a handsome photo, please. So let me start. My topic you can see on the screen, oasis in the current global context. Now, when I say oasis, it means there is some desert somewhere. Now, before that, let me say what Rao sir said. Rao sir showed the history and the future, where we as India were 1,000 years ago, and where we are going 10 years hence, 100 years hence. What I will talk about is the near term. It's like driving. You know, the road is long, but while driving, you can see only so much. And then you go on and on and on. I'll talk of some of the, if you are good, why we are good, potential and challenges in the near term or near to medium term. Now, when I say desert somewhere, because we are an oasis, so there's a desert somewhere. Look at this headline. Does this ring a bell? Any reaction? Do you agree, disagree with the headline? Any comments, suggestions? Or do you want to let it pass? No reaction? You agree? Have you heard of Third World War? Have you heard of the Third World War? Lunch was good, obviously. That's the trick to wake you up. The Third World War happened in 2020. China won it without firing a single bullet. And now we are going through the Fourth World War, and what is that? So what we see, Russia, Ukraine, or China, Taiwan, whatever we see all over the world, that is only the tip of the iceberg. What is actually happening is a war for control of geopolitical resources. Today, any country who is somebody in the world is doing something to control. USA, you know it, always the big dada. Today, China thinks they are someone, China is challenging. Russia, whatever they are worth, they are doing something, whatever they can do. And even we as India, we import oil from Russia. Yes, we are doing it. We will do trades in INR, we will do it, in spite of whatever somebody doesn't like it and all those things. So that broadly is the global situation for control of resources. What kind of resources? This doesn't work. Oil, gas, fertilizer, food grains. And deglobalization. That's our talking point nowadays, which is not good from the global perspective, but yes, that's how it is, and we are going through this thing now. Now, when I say deglobalization, look at this trade data. Now, look at this 2008, where it was global trade as a percentage of GDP, where it peaked. Obviously, Bfsi happened. And by the way, what is Bfsi? It is global financial crisis. Actually, it is US crisis, not global. But we can't call it US because they are US. We can't call the COVID as China flu. We can call the Spanish flu as Spanish flu because they were Spanish. But we can't call the China flu as China flu because they are China. We can't name one variant as whatever, XI, because of somebody's name. Anyway, it's a different issue. So Bfsi happened. So it dropped here. It recovered, but it never really recovered to that extent. Look at this size of the bars. See here. Which means post-2008, global trade never really recovered to that extent. That is one issue. And this is the coming storm, the desert. The R word, the recession. So what is your view? It may happen, what is your view on that? Will it happen? Yes? It will happen? Okay. So this is a view from the World Bank. This is what they are saying, the risk of global recession. Should I move on? Now, when I say recession, we will look at some numbers, some projections, some forecasts, what people are saying. Now, look at these numbers. So, this is 23. So, for 23, in June last year, the World Bank said the world will grow at 3.4%. Now, in January, they are saying the world will grow at 2.2%. So, from 3.4, they have come down to 2.2%, but still it is positive 2.2%, not like a degrowth or something. And let's go country-wise, US. They earlier said 2.4% GDP growth rate in 2023. Now they are saying 0.5% only. That's a steep drop. 2.4 to 0.5%. Same view as the US Fed. US Fed also says they'll grow at 0.5%. Now look at Eurozone. It was 1.9 and now it is a gulla. Exam में गुल्ला मिल गया, दोबारा कुछ नहीं हो सकता है. And Japan, okay, I mean 1.31, whatever. Now look here, India, 7.1 to 6.6. So any change in growth projections, downward revision makes media headlines, right? Media headlines. Now when you look at this number, 6.6, which is the highest number here? This is the highest number, 6.6%. So Russia still degrowing because of war and all these things. China take a little bit of degrowth, 5.2 to 4.3, but still positive 4.3. They are opening up, lockdowns opening up, so they are recovering from their lows. Some more numbers. This is IMF. That was World Bank. This is IMF. So what IMF is saying is, for 23, they are saying the world will grow at 2.9%, and next year 3.1%. US, what they are saying? This year 1.2, next year 1.4%. And about India, what are they saying? 6.1 and 6.8. Again, this is the highest number in the entire table. That's about the IMF projections for India. Now, those were only two, World Bank and IMF, and these are multiple research houses. Now, look at this. The last line, if you can read, BBG is Bloomberg consensus. So, Bloomberg says global 23 estimate is 2.1%. And we have these various agencies. You can see all these names here, and you can see the range, what they are saying. Various houses and various range, what they perceive as global growth for the next year. Inflation, one big issue. So, what's happening today? During the COVID period, they all cut rates like crazy. They all pumped money, helicopter money. That had to lead to inflation. On top of that, today we have Russia, Ukraine, geopolitical control of resources, everything happening all over the world. So inflation had to shoot up. But the saving grace, if you look at these charts, it is peaking off. This one, UK, and the green one is Euro. Very high, double digit, but it has come off the peak. And these lines also, like say, US is PC by not CPI, US PC. Different concept. Everything is peaking down. And these economies, emerging economies, all this. Now look at Russia. What happened? By the way, in Russia, they are going through a GDP degrowth. They have high inflation, but they don't have any, what should I say, domestic issue. In India, anything happens, we have a domestic issue. We have some opinion, something, but they're still managing it internally. So they hit like 18% inflation. Now it is off the peak, and look at these various countries like Brazil and all. And we have our India also here. That's the picture of inflation, very high, but still, thankfully, off the peak. Now look at rate hikes. Today, inflation is high, so the only medicine they know is hike rates, and that is what they are doing all over the world. So look at the extent of rate hikes. It was actually 4.5%, not 4.25, 4.5% in the US, and look at the other numbers here, like Canada 4%, Israel 3.65, and our bunch here. So India is 2.5 actually, not 2.5, but 2.5% in India. And we have these countries like Peru and Chile. They have hiked so much just to contain inflation. And look at Turkey. This is pre-earthquake, by the way. Whatever they tried pre-earthquake. I don't know what they will do now. They're in bad shape. Now, I have been saying India is an oasis. So why? Why so? What is the saving grace? The saving grace is we have a large domestic economy. We have a lower dependence on exports. Now look at these numbers. This chart shows exports as a percent of GDP. And this is merchandise only, meaning non-service, non-IT. So India's economy dependence on export is only so much. So I'll show you some of the numbers. Look at these numbers. 80%, 90%. Vietnam, Malaysia, Netherlands, they depend so much on exports, which simply means if something happens to global growth, what will be their status, their situation? They face a big, big challenge if it were to happen. And look at India. We are here. We are only here. Merchandise only, non-IT, non-services, but still we are better off. And look at China also. They're not as dependent on exports. but those countries, they are dependent so much on exports, and they face a bigger challenge than us. Look at the projections. What is the source? I have taken from CRISIL. Now, this is the 5-year average GDP growth projection given by IMF. For IMF, next 5 years GDP growth projection, and look at where we are. India 6.7%. Independent agency IMF, they have said we will grow so much. India so much, 6.7, China 5.2, and we have the other countries here. And that is why we are saying we are the oasis in the current global context. Whatever is the likelihood, whatever is going to happen, we will grow maybe somewhere around these levels, maybe a little bit here and there because of recession and all these things. What we did right. If you recall, during the COVID period, there was so much of a debate and all those things, what the government should do, how much money they should pump in and all those things. Now, even though we had those packages, Atmanirbhar and all those things, in terms of headline, actually it was not so big, it was not so high, which means the economic hit was not as much. So if you look at these numbers, if you look at India towards the left, third from left, and look at these numbers. Fiscal stimulus as a percentage of GDP, and look at these numbers. Italy, UK, Japan, Germany, they pumped in so much of money. So what is your view? India did only so much, they did so much more. We did right, wrong, what is your view? We did only so much and they did so much more. Was it good, bad, right, wrong? We did right because, sorry? We did right. Right. The reason is we are a growing economy and we have a deficit, fiscal account deficit, and we can manage so much. Whereas advanced countries with a bigger balance sheet and lower deficit, they can manage so much. So they can afford to pump as much, we can't afford. That is point number one. Point number two is, if you look at, I'll show those numbers now, our budget and how much the government is spending on capex now, it is much higher now. So the government is pumping money now, they didn't do it at that point of time. So at that point, what we did is fiscal prudence, means basically discipline. Now look at this. This is capital expenditure as a percentage of GDP. So FY23 was like 2.7, 2.8% of GDP. Next year, as per the budget, it is 3.3% of GDP. It's almost the highest ever. So the government is spending now on capital expenditure, which will bear fruit in times to come. And this is the share of capex in the of the union expenditure. Look here. 21 challenging times, it actually came down only this much. Now it is 19% and going even higher. This is the point I was making. When in lockdown, we cannot go out, we cannot work. So why spend more on capex? Now things have opened up, so spend money now, build capacities now, so that we get the fruit in 5 years to come. This is the budget breakup. Look at this. Revenue, capex. So what is revenue? All this routine, interest payments, salaries, and all regular stuff. And capex is capacity creation. Roads, hospitals, bridges, even soft ones like insurance, schools, colleges, soft capacities we are building up. So look at the breakup. From 85 and 14, we have now come to 17 and 22. Now in the budget, they spent so much more on capex than revenue. This is the banking industry. So in the banking industry, the credit offtake growth rate is so much higher here, and deposit growth rate is somewhere here. There's a base effect also here. Now this number, this percentage you see, last 1 year, offtake has grown by 19 lakh crore, and deposit has grown by 17.4 lakh crore. This is percentage only. Difference is there, but not as stark. There's a base effect also here. So basically what I'm trying to say is, corporate sector is growing. So who takes loans? Corporate sector, retail, MSME, everybody. So now we have bounced back. Now we require money to grow, and that is what is happening now. Deposit growth is happening, will happen going forward also. But the point is that demand for money is back, which means we are recovering. This chart shows the health of corporate India. So there is something called credit upgrade ratio. It is the ratio of number of companies upgraded by the number of companies downgraded. So this is from CRISIL for the first half as in April, September 22. So in the first half, if you can look at this number is 5.69. 5.69 means In April-September 22, CRISIL upgraded 5.69 times more companies than they downgraded. So how did it happen? In the COVID period, corporate India did a very good job of managing themselves through deleveraging. And that is bearing fruit now. Usually what happens in economic downturn cycles, we see more of downgrades. Here the reverse is happening. I mean, we are out of it now, but we see a positive picture here. Now we come to the budget, fiscal deficit. So this tallest bar is 9.2% of GDP. That was the fiscal deficit of, I mean, not for states, but center only. It was as high as 9.2% of GDP in FY21, challenging times. So the government had to spend more. And where did they spend? Mostly on food and support systems. No, all those PM, GKY, Pradhan Mantri, Garib Yojana and all those things, that is where they spent money. But now we are bouncing back to normal, and look at this now. So FY23, deficit is 6.4% of GDP, and next year target is 5.9% of GDP. So basically fiscal prudence, fiscal discipline, we are coming back to the path of fiscal discipline, which is another positive thing. And how is it happening? This what I showed you, this 6.4 to 5.9, how is it happening? It is happening with the blessing of lower subsidies. So if we look at these numbers, subsidy went up so much here, challenging times, food, fertilizer, and all those things, and now it is coming down. And look here, from 15.7 to 16.2, it actually went up. So what happened in the current financial year? The government spent much more on fertilizer. Because of the global situation, prices were high, so the government allowed more subsidy on fertilizer for our farmers, which is why fertilizer bill shot up. But next year, this is the estimate. So lower subsidies on food also, PMGK is gone now, there's some other scheme now, but lower subsidies on food and fertilizer, leading to lower subsidies. Now this is one challenge, not a positive thing. Current account deficit, if you look at it, Q2 of FY23, you see, going down. And this is a concern. Q2, as in July-September 22, current account deficit is 4.4% of GDP. Multiple reasons, oil prices, whatever oil prices are, exports not growing so much, imports going up due to whatever reasons, opening up and all those things, that is a concern. The saving grace is, what they are saying, this is a projection. Saving grace they are saying is, second half of the fiscal year will be relatively better than the first half. And it is broadly manageable. Whatever forex reserves we have, whatever inflows we have, balance of payments, FDI, FII, it's kind of manageable, not a major concern per se. And the other is currency. So this chart shows rupee starting at a base of 100 as on December 21. Taking that as 100, how has rupee moved from there to here? So as against USD, so this blue line is USD INR. So it is like 110-ish or whatever the number is. So rupee has weakened against USD. Now if you look at it, all these lines, all the other currencies, Euro, CNY, GBP, this curve is coming down. So what does it mean? It means up to here, up to September 22, the rupee was actually strengthening against these currencies. And how did it happen? In this phase, when USD was strengthening, other currencies were weakening. Other currencies weakened more, and we weakened less against the USD. So relatively, we actually strengthened against these currencies. And now we are giving up those gains. So since October 22, DXY is weakening, as in the global thing about USD, DXY is weakening. So other currencies are strengthening, but we are not, we are stable. So we are giving up some of the gains, but net, this currency is kind of stable, not a major concern as of now to warrant some of much of policy this thing. That's about the global GAN, and the context is Bfsi. So I'll show you something about Bfsi and what is the projection about Bfsi industry. I got the question. Go longer back in history. 1947, what was the exchange rate? 1:1. And I read somewhere, go back even further in history, 150 years ago, exchange rate was, hold your breath, 13:1. 13 USD for 1 INR. From those days, we have come here. So from independence till today, rupee has weakened and the rupee will weaken. There are multiple reasons for it. Being an emerging economy and being a large economy, we require so much. Capital items, consumption, we require so much, and we have to import so much. That is one. Secondly, this export competitiveness. We keep on saying, labor is cheap, labor is cheap, labor is cheap. But if you look at the overall cost or competitiveness, we're not competitive. Look at China, the kind of things they have built up, efficiency they built up. To compete with them, we have to weaken our currency. That will happen. What RBI does is, RBI tries to contain the pace of this weakening. That's all they do. But the currency will weaken. It's like teenage, just 1 minute. Teenage days, I remember, rupee dollar was my teenage days. Rupee dollar was 16 and petrol was 16. Today, rupee is like whatever, 82 point something. Petrol, you know it, 100 or whatever. Yes, madam. It is not kept high. So, rupee is convertible on current account. On current account, as in whatever regular trade, whatever we have, that's convertible. Only on capital, we have limits. We can never $250,000 per year, all those limits are there, but current account is fully convertible. It's not managed by anybody. RBI can influence.
Influence as in? I mean,
as in, when there's a sharp weakening of the rupee or even a strengthening, for that pace, what RBI does is, RBI instructs the banks to do certain transactions.
Okay.
So, RBI as a market participant, they will do certain trades or transactions to contain the pace of the rupee. So, basically what is this thing? Demand supply. On a particular day, let's say rupee is 83 as an example. Lot of demand for USD. USD becomes 84 as an example. What the RBI will do is, they will supply USD to the market. So, 83 becomes 82.5. So, that way they contain that day's movement. So, if you look at it, our forex reserves currently we have $573 billion as of today. The highest point was 642 billion. The lowest point was $525 billion. So, this move from 642 to 525 was what? Part of it was RBI support to the market, to the forex, not the whole, but the part of it. So, again, we are building up our forex reserves. The point I am making is, RBI has forex reserves, and sometimes they use part of this reserves to support the rupee in terms of sudden weakening of the currency. It's not like a managed kind of thing, but influenced kind of thing. Okay, let me finish off this. The last part, the Bfsi part. As Rao sir said, financializing that thing we saw, that seesaw, what is it called? The Bengali is Daripalla. What is the Hindi word for that? Tarazu. Insaf ka tarazu. Sorry. Finance ka tarazu. Finance ka tarazu. Okay. So, here we have financial and physical. So, what is this physical and financial? Like you guys, like Partha goes from India to Bharat. So, in Bharat, where do they save? Zameen, Zaidad, Sona, that kind of thing. And here in India, we save in financial this thing. So, we are seeing a move towards financialization of our savings and investments. So, look at this, physical and financial, how it has moved. So, look at the headline. Share of financial savings increased from 45% in 16 to 52% now. And that is a positive move we are seeing, because this is better, this is more liquid, and we have better price discovery in financial savings. Taking a photo, sir, please do.
So, it's only that literal, if you look at the RBI report, the real savings in asset terms is only 10%. Balance is literally supported with housing loan, which will turn as an asset, assuming they pay off the loans. Then it's like 24%, but I would rather take it as 10%, right?
So, this includes everything, bank deposits, everything is included here. So, that's a different, I'll tell you what, offline.
I just wanted your thoughts on this. By moving from, this physical assets to financial assets, are we not exposing ourselves to the inflation risk? Or,
That you do any which way.
So then, are we not better off with physical asset than these financial assets? Because typically physical asset, gold and real estate, just to give an example.
Let me give a completely different example altogether. Pardon me for giving this completely different analogy. You are traveling and there's a traffic jam. Would you prefer to be in a bad car or a good AC car? So, similarly, inflation is all pervasive. It takes away from anything, be it equity, be it debt, be it physical, be it whatever. That is all pervasive. But financially is better because better price discovery and more liquidity and less maintenance. Like gold, you can buy physical gold, you can buy the instruments for saving in gold. That is better. No jhanjat of safekeeping and all those things. You can sell, you can liquidate. So, all the advantages are there. Okay, so I'll quickly complete the PPT. Now look at this. It's not my thing, it's from CRISIL, and look at what CRISIL is saying. Managed vehicles. Managed vehicle means everything other than bank deposits. So which are those, tell me? When we say managed vehicles, as in managed investment vehicles, apart from bank deposit, वो क्या है? Apart from bank deposit? Yes, mutual fund, yes, and? Okay, small savings. Okay, yes. And which is the biggest? In terms of AUM, asset under management, which is the biggest among these? Yes, insurance, because insurance includes something called LIC. And LIC is LIC. And second biggest? Yes, Rao sir is smiling. Yes. Okay, now look at the numbers. So in managed vehicles, we have 135 lakh crore. What does that mean? That means 57% of GDP as on March 22 last year. Okay, and look at the projection. The projection is 315 lakh crore. 315 lakh crore, which is 74% of GDP by when? By 27. So that is the growth being projected for managed vehicles. Insurance, mutual fund, or kya hai apart from these? Yes. So these are the vehicles which will grow so much. Okay. Now look at the size and the growth. So this is the size. Insurance so much, including LIC, mutual fund so much, and we have AIF, PMS, all these so much. And now look at the growth projections. This is the growth as of now, and also the projections next slide. So bank deposits from here, 2017 to here, 175 lakh crore now, they have grown so much, 10% CAGR. And these managed vehicles, insurance, mutual fund, PMS, AIF, they have grown so much, 16% CAGR from 17 to 22. And this is the money under management, okay, 2-3 minutes. And this is the projected growth rate. So look at this, what CRISIL is saying, that these vehicles will grow so much over the next 5 years from 22 to 27. My last 2 points. One thing which you are hearing, one concern in the markets which you would be hearing generally, not Adani, I won't talk about Adani, is about FPI selling in equities. Yes, FPI selling in equity has happened. Now, what is the situation after FPI selling in equities? Look at these data. As on March 21, FPI holding was so much, 21.5% in market cap and this much, 43% in terms of free float market cap. I repeat, 21.5 total market cap and 43% in terms of free float market cap. Data as on June 22. After having sold so much, how much do FPIs hold as of today? They hold 18.4% in total market cap and they hold 39.1% in free float market cap. Lower than earlier, but only so much. So this is my last slide. Mohit already gestured. This is India's corporate profit as a percentage of GDP. So look here. So it was here earlier, almost 10% in FY16. From that, we came down here, COVID times. After that, we have recovered here around 9%, and that is the positive part. So that's about the PPT. So any questions if you have? Not much. Why? India, no, basically no, we are growing. US, what is happening is, if you look at data, they had 2 quarters of negative GDP growth, first 2 quarters, then they have had 2 consecutive quarters of positive GDP growth. So they have kind of recovered. If you look at latest data, like jobs data and all those things coming in buoyant. So they are kind of managing, so not really going into recession. They will have a growth slowdown. In the sense, a large economy like USA growing at only 0.5% in this year. That is what World Bank says, that is what US Fed says. Only 0.5% growth this, just next to recession. So, okay, I mean, only a slowdown, not really a recession per se, but they will kind of manage. India, no, we are growing. So what will, just I mean, India, what will happen is, if at all we have a global recession, the growth rate will come down. So if you recall pre-COVID, all those talks about slowdown and all those things, So what happened then is our growth rate came down from 8% to 4%, but it was plus 4%. In COVID, we slowed down. So what it means is if that all happens, we will be impacted, but not so much. We'll kind of manage with a decent positive growth rate. Yes, sir.
I have a view about the 5 trillion economy. What we are talking about, whether we can achieve as per the estimation of 25?
Of course. Look at a bit of history. 1947, minuscule GDP. For us to earn the first 1 trillion, it took like 60 years, approximately 60 years for the first trillion. From 1 to 2 to like 7 years. 2 to 3 was like, say, whatever, 5 years, whatever. There's a compounding effect here. So whatever numbers you see, what Rao sir showed, not our projection, but their projection, IMF, World Bank and their projection, 7.5 by 2030 and even higher, 26 trillion like Rao sir showed on the screen, 26 trillion by I think 47 or something. That is their projection. There's a compounding effect here, like investments. So things compound, we also will compound.
Well, achieve the 5 trillion economy, whether you don't feel that GDP growth should be more than 10%?
Of course it will be. See, what is growth? Nominal GDP growth. So as an example, if GDP grows by say 6 or 6.5, or even 7%, 6, 7%, that is real GDP growth. Add inflation 4, 5, 6%, whatever. So nominal is always double digit. So if we grow at nominal 10, 11, 12% per year, just do the math, it will happen. It's bound to happen.
Unlisted has come down. No, if you see unlisted companies. So unlisted, the major component of unlisted companies comprise of those of the fintech and the new startups as well. When you talk about. So does this graph means that they are not being that profitable, or maybe the established corporates are more profitable and they are doing better in the last 2 years run?
Honestly, I won't have the answer because it's not my thing. I have copy pasted from somewhere. You can see the source.
This is what it implies.
But yes,
to. Yeah.
Broadly, my sense, I think the entire room here, I think all our senses, we all are growing. Listed, unlisted, whatever we are, I think we are all growing, right? Yes, no? We are all growing, I think.
Have got listed in the last few years.
Yeah,
right?
that's
so
a good answer.
What was earlier unlisted has now become LIC has become listed, right? So
yes,
that could be the situation where what was earlier unlisted has now become listed.
Yes. So what we have is FY22. So LIC happened when I think whatever few months earlier. But anyway, broadly we are seeing this listing of more and more companies. Okay, Mohit is standing here. Okay, we can discuss offline. Okay, thank you.